My name is John Worrell, and I'm an attorney with the Pennsylvania Housing Finance Agency. At that time, I'd have to take equal time to rebut some of the comments that were made in the last session, but I'm not going to go about HEMAP and Euro and so forth. Our panel today, you can't blame them for the name. And if you didn't bring your ferret, it's okay. But that name was, I came up with that. Ferreting out evildoers, let's say, President Bush would like to say, in the home mortgage modification business. PHFA, because we're the only agency in state government that has the word housing in our name, we tend to get asked about housing issues all the time. We get letters from prisoners about housing. When they get out of jail, they're looking for housing, and we help them get housing. We get letters from people complaining about their housing. Anything to do with housing, and the governor's office sends us things that, anything with housing, we get. Okay? But we do have a kind of unique bird's eye view sometimes in terms of what is happening with housing around Pennsylvania. Because for several reasons. Number one, we run the HEMAP program we have for many, many years, about 2 decades running the HEMAP program. We are a holder of about 50,000 first mortgages that we help people, first-time homebuyers predominantly, become homeowners. So we own and service those mortgages. So we have that kind of viewpoint in terms of being a loan servicer ourselves. We are run by a board, and on our board is David's boss, the Secretary of Banking. So our board meets monthly, and we're frequently brought into and asked to deal with issues regarding housing and problems with mortgage foreclosure. For example, a few years ago, we were called upon to go up into the Pocono area when there was a large mortgage foreclosure problem with some of the vacation homes that were being sold to people in New York State who were sort of lured into Pennsylvania looking for Bambi and found not the American dream, but a nightmare in a lot of cases. So we went up there and helped the folks there. Recently, we've gotten into the mortgage modification world for several reasons. Number one, we do mortgage modifications a lot in our single-family programs. We have for a number of years. Really, it started with the surge in refinancings, and we were seeing that we were losing mortgages to subprime lenders because they were convincing people that they should, borrow money, pay off our mortgage, and also put a swimming pool in and take a cruise someplace. So we were modifying our mortgages to reduce those interest rates down to in a sense, compete with the teaser rates that were being offered by the subprime lenders. More recently, as foreclosures increased, we did a lot of mortgage modifications of our own loans because we wanted to keep people in their homes and not push them out of their homes. We've done about, last count of around 500 or so mortgage modifications of our loans, of PHFA-owned loans. And usually successful. I mean, we've reduced interest rates down to as low as 2 or 3%. And I think we've demonstrated that A, it can be done, and B, it makes sense to do it. We don't have all the trosh problems that were mentioned previously, the tranches about where we don't have those issues to deal with. We own our mortgages, we can make our own decisions. With the HEMAP program, we have our counseling network that's out there. We have the NeighborWorks counseling network and legal service counseling now that we pay for. So we're seeing now the people who probably used to make subprime mortgages, the mortgage brokers who used to do subprime mortgages, and as that has dried up, they have to do something to make a living. So now they're doing mortgage modifications. Maybe someday they'll be back to selling used cars again. I don't know. But over the last 6 months to a year, we've had the good fortune, really, of working with the Department of Banking, the Attorney General's Office, Department of State, in trying to have a dialogue about, where are the bad actors, and then how can we help from a technical standpoint in helping the enforcers, A, identify who they are, and then B, doing something about them. Okay. I'm going to show you 3 things. But we're not the only ones doing this. The Federal Trade Commission has also recently gotten actively involved in the same world. I'm going to show you 3 commercials, basically. The first one is one that we did with the Secretary of Banking. Brian Hudson did a little 30-second public service commercial. The second one is with none other than Sam Elkis, his movie debuts today. And the third one's a longer, a somewhat longer one that was put together by the Federal Trade Commission. But all dealing with the issue of mortgage modifications and looking after the unscrupulous mortgage modification companies. And don't, the homeowners, don't be fooled. Don't send your money off to someone who isn't going to do anything with it. It isn't going to really help you. Okay. PHFA pays for free counseling to help people work out mortgage modification. So why should they be sending $2,000 or $3,000 off to California or Florida or whatever? It makes no sense. So with that said, we'll show those videos, and then we're going to have John Abel, who's Senior Deputy Attorney General in Harrisburg, in the Consumer Protection area. And then we'll have David Blanken, who is in the enforcement side, who's an attorney, doesn't always want to admit it, but he's an attorney. And of course, in the enforcement side of the Department of Banking. Okay, so, roll.
Hi, I'm Steve Kaplan.
And I'm Brian Hudson.
If you're a Pennsylvanian struggling to pay your mortgage
Or falling behind on your payments, we want you to know that free help is available.
call the Pennsylvania Mortgage Helpline at 866-984-5108.
We'll connect you to a certified housing counselor that will help you avoid foreclosure and keep your home.
That number again is 866-984-5108. The call is free, and so's the help.
Loan modifications and foreclosure mortgages are becoming more prominent in today's economy. Don't fall victim to them.
The Pennsylvania Housing Finance Agency has partnered with local housing counselors and attorneys with the Pennsylvania Legal Aid Network to provide assistance to homeowners at risk of foreclosure.
Call 1-800-822-1174 for an approved housing counselor near you.
The financial problem started when I was injured at work. There was no money coming in. I had to figure something out quick.
We received our letter of default around Christmas time.
There's nothing worse than having the fear that you're about to lose your home. The desperation that goes along with that is very intense for just anyone. We did go out to see if we could find some foreclosure prevention companies, but during the conversation and meeting with them, we found out that the first thing that they wanted up front from us was money before we even filled out the application. There's lots of companies that were offering the services and making a lot of promises to us that they could save our home. I really just didn't feel comfortable with them at all, and I just decided to take another path.
There are a lot of companies claiming that they can stop the foreclosure process or help you modify your loan. You should be extremely cautious of people who make any guarantee, ask for money up front, or tell you to make your mortgage payments to them.
I called one of the loan modification specialists. They said they could help. They needed a $500 deposit and then $3,000 after that. They said they had attorneys working on their side. They would talk to the mortgage company. They took my money and they didn't do anything for us at all.
We were desperate to save our house, and I guess that's what we believed in them.
It was just a scam.
All of a sudden on a Saturday night, our front doorbell rings. I open the door and there's this lady on her front step talking at the top of her voice saying, "You're going into foreclosure, you're going to lose your home." Well, I immediately asked her to leave. I then called my servicer and they didn't know anything about her. Apparently it was a scam.
Unfortunately, there are a lot of scam artists out there. Some even look to be affiliated with the government. Their websites have official-looking logos and graphics, and their names include words like federal. Hope Now connects you with counselors that provide free foreclosure prevention assistance.
When I met with the counselor that Hope Now connected me with, I was a little suspicious when I first went in there. I noticed that she didn't ask me for any money. I really felt that there was someone finally here that could help me now. I do believe that Hope Now saved my house. If it wasn't for them, I don't know where I would be. We probably wouldn't be sitting here today.
Our counselor was so professional, I was impressed. She looked at our entire situation and helped guide us through the whole process. Everything that she has done was free, no cost to us.
Time is of the essence when it comes to the risk of foreclosure. No one can guarantee you can get a loan modification or that they can stop the foreclosure process. But if you are in trouble, the first thing to do is contact your mortgage company and get housing counseling. You can do this by contacting the Homeowners Hope Hotline at 888-995-HOPE. The sooner you call, the sooner you can get peace of mind.
It's very scary knowing you could lose your house. You feel like you're all alone in the world. It's hard to know who you can trust, but you can't let that fear lead you down the wrong path with people who might be out to scam you. There are real people offering real help, and they're at 888-995-HOPE.
Okay, if you go to the FTC website, that video is there, so you can access it yourselves. If you want to show it to somebody else, you're able to do that. So next we have John Abel.
Great. I don't think I need the mic. I got a pretty big mouth. Can everybody hear me? Anybody can't hear me? Raise their hand. How about that for a question? All right. So John Abel. I work here in the Harrisburg office of the admin over in Strawberry Square. And as John said, we're very pleased to be working cooperatively with a number of other state agencies out there. So it's not a matter of the left hand not talking to the right hand. For some months now, we've been meeting and discussing and having a dialogue about some of these potential problems that are out there. What I want to do with the little bit of time we have this afternoon is give you an overview of the Bureau of Consumer Protection, what we can do, what the extent of our authority is, and maybe give you some practical advice if you have somebody who comes into your office with a particular problem and you really don't know where to go with them. From what I understand, most of you folks are going to be seeing potential clients or clients before litigation, before the foreclosure action has been filed, so you might be talking to people who got the notice or falling behind or getting dunned or just in a real bad way with their mortgage. So, and this is really kind of the critical time, and want to give you some thoughts about where you might be able to point those clients or potential clients to, and also reiterate and revisit and maybe to explore a little bit further some of these red flags that the feds talked about in their little blurb there. I think it's a well done commercial, so to speak, as John said, and maybe a little dramatic, but I think one of the things that the vignette points out is that, and you folks know this better than anybody else, that these consumers are really in quite a pinch, and this is a very emotional, kind of heart-wrenching time for them because they're at risk of losing their home. It's typically accompanied by unemployment, loss of a job, health issues, any range of family, personal, divorce, any range of stressors as well in their life that puts them in a desperate position where maybe their rational faculties aren't working as they normally would or you expect one would. So late one night they start to Google loan mod, mortgage rescue, and they come up to a website that by all intents and purposes and from all appearances looks official. I mean, right up to the knockoff of a government seal, a video of President Obama. A lot of companies have really taken off on this hope now and really taken that terminology and used that name in their either metadata or their taglines or in the actual name of the website. So people are going to something that says, hope now, help.com, and that doesn't click that it's got to be a .gov to be a federal government or official website. So you've got really close knockoffs. People reasonably believe that this is a government-affiliated entity, so they sign up and they're off to the races. So I think that's one point that to the extent that we're counseling people or you're counseling people, it's as much hand-holding probably than anything else in terms of legal advice that you can offer the consumers. And we get them in our office. We get them routinely, and myself and other folks working on these matters are talking with them quite frequently. So we have a pretty good idea, as I'm sure you do, even more so, of what they're up against and why they may not be thinking quite as clearly as you think one would. So having said that, what does the Bureau of Consumer Protection do? How can we help? for those, I'm sure a lot of you are aware of our mediation program. So if you've got a client that say, hey, listen, I just dished out $500 or $1,000 to this company in Southern California, but I can't get a hold of them, the website crashed, they're not returning my calls, we do encourage you to file a complaint. You can do that by the website, www.attorneygeneral.gov. If you're going to do that, my recommendation is to have the consumer or yourself download a hard copy complaint form and attach copies, don't send originals, send copies of all the pertinent documents, rather than doing it online, because online then we don't get the documents and it can kind of slow down the process. So obviously what we'll do is, although we don't represent the individual consumer, we'll reach out to that company, try to get a resolution, try to track them down, push them to make the consumer whole, or at the very least get some sort of resolution. Those complaints are important for us because they establish a pattern or practice that allows us to conduct an investigation. It wouldn't be public, but we have administrative subpoena powers. We can bring in people for testimony, bring in people for documents, and then if the case warrants it, we can sue. And part of our cases can include restitution, or we can settle on an animal known as an assurance of voluntary compliance that gets filed and has enforcement mechanisms built into it. So ideally, we can get penalties, costs, injunctive relief, and then one of our priorities is always consumers trying to get money back into the pocket of folks that have been harmed. So if anything, you're kind of your wits end. I don't know where to go. This is I've written a demand letter. Sometimes the bully pulpit and the letterhead, the Attorney General can break things up and move the case along. So that's a little bit of what we're doing. We don't proceed criminally. We enforce the consumer protection law, which I'm sure you folks are all well aware of. Under 9.2, you've got a right of a private cause of action there, where you can attorney's fees and treble damages on the appropriate kind of case. Obviously, a loan mod company that's deceiving consumers would, in my view, be violating that Pennsylvania consumer protection law. The other thing that I brought with me, and part of our focus has been the Credit Services Act. That's found at 73 Purge 2171, and it's it's been around for quite a while, and it's a powerful tool we found for going off a whole range of scams. And what the Act does, it broadly defines what is called a credit services organization. There's a federal act called the Credit Repair Act, but we have one here in PA. So a credit services organization is really broadly defined. Somebody who, with respect to the extension of credit, represents that they will do a number of things for payment of money or other valuable consideration. So if there's a company out there that's saying, hey, for money, I can improve your credit I can improve your credit record, history, or rating. I can get you an extension of credit, or I will provide advice or assistance with regard to one of the above, improving your credit or getting an extension of credit. So there's a number of exemptions there, one of which includes lawyers, but if you've got a company that's doing that, then they have to be bonded or have a letter of credit with the Department of State. The Department of State is sort of the repository of the bond. If they fall within the Act as a CSO, 9 times out of 10 that's not the case. And then they've got to have an information sheet, a prescribed contract. There's a 5-day right to cancel. So if you're within the Credit Services Act, it's likely you're going to have a violation. And the reason why I say that as well is the act. It's a very strong act. It does say any waiver is any waiver of the violations is void and unenforceable. It says a violation of the Credit Services Act is a violation of the CPL. And it also says, and I just checked this because I normally don't check the private action sections of these acts because we don't do that as a public body. But Section 11 of the law says any buyer or borrower injured by a violation of the act or for a breach of a contract can get damages. They can get actual damages, but no less than the amount paid by the buyer, plus reasonable attorney's fees and costs. An award, if the trial court deems it proper, may be entered for punitive damages. That's got to be one of the few cases I've seen a statutory remedy to punitive damages in the right kind of case. So that's the legal landscape of what we're up against here with these loan modifications and mortgage rescue companies. A wrinkle to this, I guess another angle that is popping up here is part of the appeal to the loan modification mortgage rescue companies, in addition to kind of a knockoff or look-alike of a governmental body, is this proclamation or this representation, I should say, on the websites as well as the direct mailing pieces, that we have a, quote, team of attorneys that'll work on your loan mod for you. So, you know, we're attorney-based. We'll get you an attorney, so the consumer thinks this is a great deal. You know, I'm getting, you know, I don't have to pay $200, $300 an hour. I'm going to have a team of attorneys working on this loan mod. And that raises all kind of problems with rules of professional conduct. John was kind enough to give me an article just from the ABA Journal in July 2009 about, you know, if there's lawyers out there that are affiliating themselves with these loan mod companies, they may be running into problems with rules against using runners to get clients, fee splitting, and then a failure to exercise some sort of independent judgment. From what I've seen in some of these cases, when you go further along this process, the agreement that the consumer ultimately signs, having been lured in by the promise of having a team of attorneys to work on your case for you, the contract says, well, we're not going to be your attorneys, all right? We're not going to give you legal advice, and you ought to go out and get independent legal advice before you sign this contract that we brought you in for, promising you an attorney. So there's a lot of confusion, if not outright deception, when these loan modification companies are kind of dangling out that carrot of, hey, you'll get attorneys real cheap for you. And the other thing, I think the other issue that's raised by this is, you know, to what extent can an out-of-state attorney really take a case for a Pennsylvania consumer that's got a mortgage in Pennsylvania and is now going to modify the terms of that mortgage? Isn't that, in fact, something that will be a problem with the unauthorized practice of law? So that's another angle that we see, sort of another pitch, so to speak, another red flag is this promise of meaningful attorney involvement. The other kind of catchphrase that we've seen is, this loan modification company will give you a forensic audit. So we have experts that know what a predatory loan is. So we're going to go through your loan documents and we're going to identify truth in lending violations. All right, so I don't know about you guys, but I mean, I still don't know if I catch all truth in lending violations that are out there. But that area is extremely dense, and you know, I think if anybody's the experts in that, it's the folks from legal services. Not to be done by anybody who's really trained in truth in lending and what has to be done and what has to be in documents to see if they're in fact a quote predatory loan. So it's a buzzword that's getting kicked around. It sounds good. You know, people are thinking CSI, or they're going to get in there with all kind of lab work and figure out if it was a forgery, and a lot of times that's in fact not the case. So that is another kind of red flag. John made a good point. I think I'll turn the microphone over to David for him to add whatever he might have in terms of sort of red flags and a third angle from banking. But the reason why I motioned to David is our experience has been in the course of looking at these kinds of cases. It is in fact sort of this glut of mortgage brokers that were without work, and you know what they're doing is they're you know, like my mortgage business is dried up. What am I going to do now? I don't want to really sell used cars, so I'll go out on the internet and I'll affiliate myself as one of these processors. So I'll be hooked up with this processor I don't know anything about, and I'll bring my clients in or my former clients in. I'll start ringing them up, probably violating the do not call law. We're all sending out blanket flyers to get them in the door to have them call me. And then all I got to do is take this information and sending out to this third party who's actually then going to try to go out and get the loan mod. So I think that's sort of been where this in a sense, I hate to use the term perfect storm, but it's overworked, but it sort of was the perfect storm of a lot of folks needing loan mods. We had exploding arms, we had terms being changed, we had people getting behind, and we had a glut of people looking for work to do. So it was a bad fit, so to speak, of all those influences coming together. So you've got people out there that are now, and again, using terms like I'm a counselor, I'm a trained advocate, I'll do a forensic audit, all these kind of fancy terminology, but they really don't have any expertise in the area of loan mods. I have one guy said, well, what's the value add that you bring to the table? Well, I'll wait the phone for a long time till the lender picks up the phone, all right? Well, that's not really, the kind of expertise that we think you ought to be holding out there is I'm willing to, put the phone on hold for an hour while a consumer could only wait for 15 minutes. So let me turn over to you, David, and then I'll pick up.
Good afternoon. My name is David Blyken. I'm with the State Banking Department. I'm the Deputy Secretary responsible for non-depository institutions and consumer services. I wanted to sort of pick up on something that John said. Our agency is exceptionally concerned about mortgage issues, and we've been working on them for a while. We were concerned before about the consumers because a consumer almost inherently, unless they have exceptional education background, however, is going into a mortgage transaction with a disadvantage with respect to you as a broker or lender. They just don't know as much. In the mortgage mod problem, you're starting off with consumers who are in trouble. So we're not talking about the point of origination where we're they're getting a house or doing a refi or whatever. Obviously, you're starting off with someone who's on their knees. And who lacks even more negotiating power. So you noticed the advertisement, the PSA the Secretary did. We've been working, as John and John both mentioned, closely with our sister agencies in Pennsylvania. I'll tell you this, it is kind of how you would want state government to work collegially and cooperatively together. It doesn't always happen. In this case, we do it the way I think that you would hope that we would. Our agency is the state financial regulator. There's also the Securities Commission and the Insurance Department. We regulate state charter banks, we regulate mortgage companies, money transmitters, check cashers, pawnbrokers, a whole bunch of other stuff. Our jurisdiction in this matter is strictly related to the Pennsylvania mortgage law, it's the Mortgage Act. It's the licensing scheme for mortgage bankers and mortgage brokers. Until recently, our jurisdiction in this issue is somewhat limited. Our jurisdictional hook has been to date with mortgage mod companies, the independent mortgage loan companies, trying to look for instances where they would offer a refi or do something with a deed of trust. Because both of those instances would require a license to engage in mortgage banking or mortgage brokering. So we have spent time looking for that. The challenges under the Mortgage Act, as it was written before, you had to be in the primary market for consideration. Mortgages that are being modified are, by their very nature, not in the primary market, not in the origination market. We're talking about being in the back end. So we had to look for that jurisdictional hook. The other jurisdictional hook is obviously licensees. And some of our licensees did, in fact, get into mortgage mods. They either did it at their company or at an affiliate. And our statute is written so broadly that we have jurisdictional look at the files and records of anyone who does that stuff. Who's related to someone. If our licensee has an affiliate doing, we can look at your records. In August, we amended the Mortgage Act to comply with the Federal SAFE Act. This is the state loan originator licensing law. If you're a loan originator in PA, now you have to be licensed by our agency. Okay. That definition for a loan originator is much broader. We believe that includes within its ambit now people that engage in this business of mortgage mods. More to come on that. But we may now have a jurisdictional hook on the activity itself. Okay. What does your state banking department do? Since the beginning of the year, we've issued at last count 22 administrative orders under the Mortgage Act. Most of them against mortgage mod companies. Most of those are for unlicensed activity. You're advertising a refi, advertising is a fish trade, or deed of trust, that kind of thing. Some of those orders, a few of them though, have been against licensees. One licensee made the mistake of doing this business through an affiliate. We did an exam, we asked them about it, and all of a sudden really weird stuff started happening. Our examiner went to the desk they gave her the day after she asked for the information about what's your affiliate doing, and The door was blocked to her room, and then they had put the desk together and covered it with hand lotion. It was very bizarre. It was almost like a high school prank or something. We couldn't figure it out. So we're kidding, that's really weird. And then ultimately they threw her out, right? We're not accustomed to being thrown out of our licensee's offices. So we sent a group of leadership down to the office, within a few days, carrying the cease and desist order that takes effect immediately. It's a rare bird, we just got this authority, but it takes effect immediately as opposed to post-hearing. They threw them out too, but we did in fact serve the order on them. So the fun part to that, well, no, not fun, it's not. The interesting part to that was the press picked up on that and it carried it all throughout the Philadelphia area. That was absolutely a fascinating story. Another licensee engaged in the mortgage mod business at the company level. The mortgage broker themselves did it. And this involved some advertising of the type John was talking about, where they represented that they were part of a government program. And people, if you looked at the ad, you would think, oh, this is part of the new president's plan to help you. So we did a cease and desist order with that particular entity. Most of these folks are not licensed buyers. We've also done press releases, a press release to alert folks, and you saw the PSA. Interesting thing from our perspective is a file for a mortgage modification is different from what we're all used to seeing on the origination side. There are different things in there. It doesn't have the traditional types of things. So to examine for that has been a challenge. So we have created a new exam template to look at these things based on our experience. And it's interesting, we tried to create the template to understand whether or not the consumer actually got a benefit out of it. The easy case, if you will, is the one where you sign up, the consumer pays their $2,000 or $3,000 and nothing ever happens. And they never talk to you. That isn't complicated. The challenge is when they're actually doing something and getting some kind of result. How do you analyze it? And we've developed a new format to do that, but that wasn't a simple task. The other things that we do, I have 6 fantastic people back in the 11th floor of our building here in Harrisburg who will interface with the consumer and assist them. And we also can sometimes obtain for them mortgage modifications with the mortgage servicer, especially if we license them. In Pennsylvania right now that isn't a requirement, but some still remain licensed. So we do quite a bit of work along those lines. We will, in part of our exam process, for instance, we will survey customers and say, hey, do you have any challenges with this company? And in this one case I mentioned where they're a licensee, we surveyed folks and they said, yeah, I had a problem. And we'll use the survey tool to assist folks and identify those who need help. And we get referrals. Part of the cooperative process we've been talking about, the PHFA Housing Counselor Network got us a lot of referrals for both enforcement purposes and to assist them. And PHFA as a servicer will raise issues for our attention. That's been very productive. So those issues, the AG and we share complaint information all the time on these folks, and that's been very helpful as well. We work closely with our sister states, especially New Jersey, Maryland, and Delaware. We've done a lot of work with them recently on identifying folks who are doing these things. And as John mentioned, the FTC has become active in this. As well as the Financial Crimes Enforcement Network, they're trying to do some information sharing work as well. So lots of folks are landing on it. Lots of folks are working on it. Here in Pennsylvania, we're doing it in a cooperative fashion. So again, we have a coordinated effort. We work closely. And the interesting part is we've sort of knitted together our jurisdiction. Consumer Protection Law, Credit Services Act, the Mortgage Act, obviously the PHFA side of things, and the Department of State is an active member as well because the filing office for the bonds or the letter of credit. So that's what our agency's been doing.
Yeah, what I wanted to do was, and it's been particularly productive because there's been a range of different expertise and sort of the fodder that we're used to working with, sort of the typical complaints is really the front end deception and as we know, under the Consumer Protection Law, the standard under the catch-all is there some conduct out there that creates a likelihood of confusion or misunderstanding in the minds of a reasonable consumer. So, and we don't have to prove intent, we don't have to prove damages as we read the Consumer Protection Law, which gives us a pretty strong club, effective enforcement tool. And the sort of the range of come-ons I've alluded to already. This case that David talked about was really sort of like, it looked like an IRS tax form as well. It was boxed in such a way that it looked like an official, 990 form or something like that you would get from the, a W-9 or something you would get from the Internal Revenue Service. The other thing that we're seeing is our guarantees or success rates. You saw that in the FTC video proclaiming a 95% success rate. The hotbeds seem to be the areas that this is really, that these companies have originated from are Southern California as well as Florida. We're fortunate, I think, for the most part, that there's not a lot of homegrown loan modification that we've come across here in Pennsylvania. But they, anything with a Florida address or a Southern California address would be a reason to maybe look a little closer. The other thing that we're sort of a buzzword that would be a tip-off to a potential scam is anybody who's promising a permanent change in your loan terms. A lot of times, as you folks know, a loan modification is not going to be permanent. I mean, it may be the lender will take you down to 3 or 5 months, or there's a whole range of forms that a loan modification can take. Forbearance agreements, that's tacked even model at the back. So there rarely is there a permanent change in the terms that you're seeing being promised by some of these outfits. The other kind of animal that we saw out there are lead generators. This is really fascinating. You've got somebody that says, "Hey, listen, I'll go out and create a website, and I'll register a domain name, save my home, save your house, and all I'll do is I'll create the website and I'll bring thousands or hundreds, if not thousands, of consumers into that website. I'll create a listing of consumers that I'll sell out to all these folks who have set up shops in their basements or in their garage, these former mortgage brokers." So you've got lead generators that are creating just a false front. All they're doing are collecting names and they're in turn selling those out. What's interesting is, and to the extent there's cold calling, there's do not call issues. We read the Telemarketer Registration Act to mean that, even if you've got a 1-800 number out there, and then consumers are calling that to enroll in some sort of consumer transaction, that company has to be registered under the Telemarketing Act. So there's a lot of different angles we can go at this, from do not call to deceptive mailings, to reach the whole gamut of the kind of conduct we're seeing out there. Obviously, I think part of what's driving this as well is the consumers' dissatisfaction, frustration, and overall bad experience with trying to get a hold of their lenders. And to the extent that you've probably seen that firsthand, in that it's hard to get to the right section, it's hard to get to the right person. The consumer can't get a payoff statement, they can't get an account history. There's all these promises that these lenders are making, or mortgage service companies, that we're willing to work with you, just get a hold of us, be proactive, don't let the problem ferment, which I think is good advice. I mean, I think consumers, the sooner they get to be proactive, the better off they're going to be. But then the frustration of the consumer is, well, we're doing that. We're reaching out early on. I know I'm not going to be able to make this mortgage payment. I know there's a bump coming up. I know that I lost a job. I'm trying to be proactive and responsible, but I can't get a hold of anybody, or nobody's getting back to me in a timely way. And I think the experience has been, to really successfully get to a loan modification that's going to work, it's going to take months. I mean, I think the experience of these lenders and these service companies is, it's a process that's going to take months, not weeks. And I think why I say that is that the pitch from the loan modification company is leading consumers to believe it's going to be much quicker than that. That we've got an inside track. We have the phone number for the President of Bank of America. We'll be able to call him up on the cell phone to get this modification through. And oftentimes there is no really, as I said, value added other than we're willing to do a lot of faxes and we're willing to make a lot of phone calls on your behalf. But we don't have really, the reality is that the loan modification doesn't have the wherewithal or the expertise to work out something that's going to be in the consumer's best interest and is actually going to have, as David said, a net benefit at the end of the day, or something they might have been, with a little bit of prodding and a little bit of persistence, they could have got on their own. And there's a whole range of programs now, some through President Obama and some through these companies themselves, to try to get out, to get to a workout that's to avoid the foreclosure, because that certainly is, I think, is the lenders, they say their last option. They don't want to own the property. The other thing that I wanted to mention was a variation of the scam is the so-called rent-to-buy. And we've seen some evidence of this, but the come-on is that, all right, well now, Mr. Consumer, why don't you tender your title, deed over the property to me, and then you'll live there for a while. You'll pay rent. In the meantime, that'll build up your credit score. That we'll go out and get financing, or we'll somehow we'll help you out. And in a couple years, then you can buy the property back after you built your score up and have developed a payment history to me as your landlord or as the owner of the property. So we've seen some of those here in Pennsylvania. Obviously, it doesn't happen. Consumer, is either paying the same amount of rent that they were paying on the mortgage, or once the deed goes over to the loan mod company, the third party, they own the property, and they can would evict the consumer, and all types of terrible things come out of this rent to buy. So we've seen some of that here in different, both the western part of the state and the eastern part of the state. The other scam that the FTC's talking about, to be honest, I haven't seen, and it'd be really hard to pull off, but they've noticed and put an alert out to the loan mod company, actually then goes and files a bankruptcy on behalf of the consumer. So, others sort of, doing that illegitimately by way of fraud or forgery. And obviously that's going to stop your creditors from calling. If you file for a Chapter 7, you will get the benefit of the automatic stay. But and so the consumer thinks, well, that's great. They stopped calling me. The bank stopped calling me. My credit card stopped calling me. My credit card company stopped calling me. They must have done something. But unbeknownst to them, there's a Chapter 7 file that probably eventually gets dismissed because there's not the appropriate follow through. So that is that's another animal that's said to be out there. The real sad part of the equation is, and John referred to this, there is real help out there. There's real help for free that people don't have to pay money for, that rather than getting this sort of phantom help. And there is sort of a continuum. There's really a range of bad actors. There are those out there that are clearly taking money and then not doing anything, just basically pocketing the money and really, like highway robbery, so to speak. And those folks are really becoming just increasing scrutiny by enforcement action. The FTC is going after them, got some receiverships, trying to settle those cases. And then there are the ones that are doing some quantum of effort. Whether or not they're actually living up to all the representations is really the issue for us, and whether or not the consumers are getting some sort of net benefit. The other kind of dynamic that I mentioned to David coming in here is I read the USA Today. The Wall Street Journal's too heavy for me, so I like the life section, the purple section of the USA Today. But it's an angle that I never thought about. It was the front page, but it was saying that people are getting either through a loan modification company or through their own effort are getting loan modifications. And the upshot of this article is that that's being carried on person's credit scores in a way that drives down the credit score. So you got an example here on the front page of the USA Today of somebody that, a diligent consumer goes out and says, hey, listen, lender, I got problems. You're going to have to work with me. So they work out reduction, and their credit score drops by 200 points. A pretty big hit on a credit score. So that's another avenue that never occurred to me. And I'm just thinking out loud here, which is a dangerous thing to do, but maybe there's some way you can, fashion these that there's a part of the arrangement is it won't be reported in such a way to the credit reporting agencies that, if anything, I would think that there ought to be a bump in the credit score, but I don't come up with the FICOs, and I'm not the guy who draws up that formula. So that's another factor into the mix. I like to think that in a lot of ways, this is the best of times and the worst of times to be in this field. There's a chance to really help people. At the same time, there's still a lot of bad actors, and we like to think that we're catching up with them. Ferreting them out, as John would say.
Okay, anybody have any questions? Yes.
I have a question about the Unfair Trade Practices Act. Our ability to bring actions under that act has been just about eviscerated because of state court decisions, in particular the Toy decision, that basically say that to show reasonable reliance, you have to show basically the elements of common law fraud in order to bring an action. Would the Attorney General support an amendment to the statute that would allow us to enforce the act the same way that your office does?
Well, I certainly say I can't speak for the office. I think we give it due consideration, and we're aware of those cases. It began really with Weinberg, and then Toy, and Toy's at a couple of different levels, of concern because I always thought that a consumer protection law account could survive an objection based on parole evidence. If I'm going to flim-flam you with a bunch of verbal misreps, and at the end of the day I can say, well, but you signed the contract, it's got an integration clause in it, and all those misreps that got you to sign the contract now can't come in. And I think it's part of when I read that case is I think it would be interpreted that way. But I think what you do would make a formal request to our office and make sure that it gets consideration. Okay. You'd have to, I guess, amend 9.2 to take that out of there. And then there was always, we read the law that obviously we don't have that obligation, but I think it's probably correct that now they saddle the private bar with that.
Thank you.
Sure.
Okay, I have brochures here on the PH-based programs on Real and Hero that really are wonderful programs and work great no matter what Jennifer says. And also HEMA. I'll put those out by the registration desk so you can get those either today or tomorrow. And actually, on a serious side, Hero, it's sort of like HEMA. You all see the people who are denied. You don't see the ones who are approved. But Hero has approved about 340 people for HERO loans. So there are people who get HERO loans, believe it or not. $22 million worth of loans have been approved through that program. And then the Real program, where we're doing a refinancing, you can get up to 60 days delinquent and still do a refi. We've done only 55 loans, but almost $8 million. And that's, I hate to say, that's real money. Okay, it's not HEMAT money. HEMAT money is appropriated. This is money that we are borrowing by selling bonds, and our bonds have to be repaid. So that's why we look a little harder at the Hero program and the Real program, because that's money we have to give back. We have to pay those bonds back. Here, HEMAP, we've done very well collecting HEMAP money. About half of the people who've gotten a HEMAP loan have paid back those loans. That's fantastic. But there's a little different tinge to our credit rating isn't behind the HEMAP program. It is on the HERO loans. So that said, and Jennifer's not here, and there's no rebuttal, I make a motion to adjourn.